Welcome to Market Fatafat right here on ET Now. That's the management of Mahindra Holidays ready to speak to us. We have Mr. Kavinder Singh as the Managing Director and CEO of the company. Thank you so much for joining in. Now, to begin with, can you sum up the quarterly revenue growth for us? What exactly is driven your revenues?
Okay, I must say this is one of the best quarters that we have had in terms of our profit performance. We have seen on a sequential basis 47% growth in profits. Now if you were to look at on a YOY basis as per the old standard, even if you were to go by the old standard on a YOY basis, our numbers have grown, profit has grown by about 18.5%. I just want to clarify that I think in the news flashes there is a number which is coming which is not a like-to-like comparison. So if you were to do a like-to-like comparison on the old accounting standard, our profit has moved from profit before tax has moved from 49 crores to 58 crores and profit after tax from about 31 crores to 37 crores. This is probably one of the best profit after tax numbers that we have delivered in the quarter. And as far as the YTD numbers are concerned, this is the first time in 9 months we have crossed the 100 crores mark in the profit after tax, and it stands at about 106 crores. This is about 11.5% growth over the same period last year.
Right. Mr. Singh, now, coming to your outlook on margins, on a year-on-year basis, if I'm comparing your EBITDA margins, they have contracted. What is the outlook on your margins?
Our margins have actually expanded. If you were to look at our margins, we are at about 20.3% on YOY basis. If you were to compare the same period last year, our PBT margin was at 18.3%. It's up to 20.3%. In fact, we are 200 basis points up on the profit margins.
Okay. Going forward, Mr. Singh, are you looking at any further tie-ups with domestic and international resorts to boost your member addition? What are you targeting for your membership addition for the year?
All right. Member additions were at about 3,984. If you were to do a comparison over the last year, same time, they are down by 5%. But if you were to look at a YTD level, we are up by 7% with 12,700 member additions. And these 12,700 member additions in 9 months are again probably the highest that we have seen in the first 9 months. As you know, our last quarter, which is the current quarter, is generally a very robust quarter. And we would definitely are looking at a membership addition growth at a year level. How much it will be, we will really see as the quarter ends. But I just wanted to make a point here that as far as the destinations are concerned, our two plans are moving absolutely as we have planned. We are on a capital expenditure mode. We have our Goa project coming up, which will be coming up in the first half of next year. And that would add another 150 rooms to us, the phase 1. And then we have a project in Kerala, Ashtamudi, which is an existing resort. We are adding another 54 rooms. That will make it about 200 rooms coming up in the next financial year. In fact, the Ashtamudi Kerala project should get completed in the first quarter. As well as if you were to look at the destinations that we are adding, we recently added Orlando.
Singh, if I may come in here, give us a sense of your average realization per member that you're seeing and how much is the advertising that you've slotted for your digital and your referral channels.
So, as far as the average realization is concerned, it hovers between 3.4 lakhs to 3.5 lakhs per member. But I want to just make a point here that we have launched a very interesting product for seniors. And when I say seniors, I mean people above 50. And that's called Club Mahindra Bliss. That's gaining momentum. And since that product is only for 10 years, a part of the reason why our average realizations are same is because that product is at a lower average realization. But otherwise, that product is extremely financially lucrative for us because on a per room night basis, that product is more expensive than the current 25-year product, and that product is gaining momentum. However, the average realization per unit of that product will be lower because it's a 10-year product. It's a flexible points-based product. So in terms of digital and referrals, the question that you asked, our momentum continues. Of the total sales that we have done this quarter, almost 45% has come through the digital and referrals.
Mr. Singh, given that your resort income and your occupancy has grown smartly sequentially, tell us what this is a strategy for growth over here.
So, as I mentioned to you, Avan, we had struggled in the last quarter. Our resort income was just 42 crores. And that was because of the floods in Kerala and Coorg. And by the way, in this quarter also, we did face headwinds in October. Our Kerala and Coorg resorts were not filling up because people had sort of, Kerala and Coorg were not in their consideration set. We also noticed that the unseasonal rains in Himachal and Uttarakhand led to some amount of loss of occupancy. However, having said that, we have run very smart marketing campaigns amongst our members, and we have encouraged them to holiday, and we have called up our members that things are absolutely wonderful, and we are beginning to see now the traction, and that built up towards the November and December, and that is why our income moved from 42 crores to 58 crores.
All right, we'll let you go on that note. Thank you so much for joining in and giving us a snapshot of the quarter gone by. Mahindra Holidays at 207.